The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. You have Tom O'Brien and Tommy O'Brien. It's a beautiful thing. We're out here growling and prowling with you. Dow Industrials right now down 19. Nasdaq's off 8. S&Ps are down 2.5. We have gold flat at 1166. Silver's at 1590. We got platinum down $6 at 989. Oil's off $1.08 at 42.90. You got the bond market. The 10 years up 8 ticks, 128.27. The 30's up 18 rather, at 158.19. And King Dollar's up 40 ticks at 97 even. And we get the Fed meeting starting today.
Yeah.
Goes till tomorrow. Apple coming out with earnings. There's going to be some little.
I saw you were just reading that Apple article about what's going to happen their holiday season, right?
And what's
it's always intriguing. There's so many variables and ways. I mean, no matter how good of an analyst you are, it's got to be. You can't. I mean, you can because they nail it so close, but it's just amazing how much revenue and what can happen with those sales, and whether they say one of their chip makers is plummeting, right? So they're thinking less because of predictions about.
That's right. Dialogue, okay, which, and I got to pull that up again. Dialogue yesterday, folks, in Europe was down 25%. 75% of their business is Apple. They do 320 million a year.
Monsters,
it's unbelievable.
Yeah.
Now, and so, I mean, I have my claws out.
Sure.
Okay. But the
Sure.
reality, okay, so picture this. My reality, folks, is this, is that Apple, no doubt, can not only move the NASDAQ, can blow the NASDAQ sky high.
Sure.
And
almost as it should, because it defines so much of that sector.
Of society.
What's going right.
Of society
right. Exactly.
right now. Now, and particularly after Google come out with numbers, go to the moon.
Yeah.
Amazon come out with numbers, go to the moon. We know that, listen, man, everyone's running around with 3 Apple phones on their ears.
Yeah.
I am exaggerating, okay?
Yeah.
But look at those numbers, man. Folks, it's amazing. We're just looking at, like, fundamental numbers. They are taking in 70...
Why don't you throw that chart up over here? So
they are taking in... Well, you know what's interesting about this, though? Look at this. Now, these are... When you're looking at this chart, folks, okay, this is pretty intriguing, actually, because it's looking at estimates in the first quarter of 2000, the ones that are in yellow are actually factual numbers that came in. The first quarter was $74 billion in 90 days. The second quarter was
revenue. Yep, total revenue.
The second quarter was $58 billion. The third quarter was $49 billion. That's interesting, man. It seems like it's going down, but I see what's going on. That's the first quarter. First quarter, Christmas time.
Is that and Thanksgiving, right? Is that the whole?
Yeah,
it's the final 3 months of the calendar year.
It must be. It's got to be.
I think it's probably the final 3 months.
Because look at those numbers. Those numbers are almost not double, but they're up 50%.
I think that includes October, November, December.
Yeah, which would make sense.
Yeah,
which would make sense. So
that's I think what that article was talking about. Those expectations.
That's right.
Although I don't know. No, we'll have to. We'll look that up at the break because the fourth quarter numbers aren't in yet. So that's still a prediction.
And the way that normally strikes, so they have a.
I think we have to look at when their new iPhones get released. I think that's a big driver of everything.
And also guess what their fiscal year is.
Right.
Because the way that's reading right now, their fiscal year.
We'll have to figure out this Bloomberg terminal. I'm sure it's somewhere in that.
and their fiscal year, and the way that looks right now is that their fiscal year, this would be the quarter that ends their fiscal year, which would make sense, by the way, because their best quarter would start, I
don't know.
Well, when you're reading that, that's what I'm saying is that when it's white, that's saying that's the one that's coming out.
But that would just mean it goes with the calendar year. Because we're in the final quarter of the calendar year.
Except that we're not; these aren't out. So when this, I believe, when this comes out, that'll turn yellow today.
Right.
Well, we'll see.
See if somebody
if we take a look at Apple, the way this is trading right now, it's flat. It's gonna be intriguing when Kevin Hinks gets on from TD Ameritrade about what the expected move is inside the option market.
You get earnings and you have the Fed.
You do.
Yeah.
You do. And you know what's going to be wild here, folks, is this. So picture this. Picture that you know that the Fed, no, you know that Apple will move the market either up or down.
Sure.
Now, the Fed will have that information tomorrow. Not that
Yeah.
it may make a difference because the Fed seems to be worried about everything.
A drastic move could definitely make a difference, right? I mean,
totally.
It doesn't have to make a difference, but
A down move would make a difference. An up move.
Well, if they crush it and pop like a Google pops 10% or something,
That's
which,
right.
which Apple could do because it's pulled back a little bit from highs, so there's no way it couldn't just pop on big earnings.
And so picture this. Picture that it does pop. We go to all-time highs in the NASDAQ, and they still don't raise rates.
Yeah. That's wild, man. I know.
It is wild. But
last time I was really paying attention, thinking that they were going to raise them, and this time I find myself kind of not paying attention at all.
We all. And now that gets intriguing because I was thinking about that when I was driving around, not yesterday, the day before. I'm saying to myself, you know what? This is where the market can throw you a curveball.
Yeah,
you know,
they could.
None of us are talking about it. Exactly. September, everyone was talking about it. That's all it was. Oh, they're going to raise rates. They're going to do this. They're going to do that. And all of a sudden, they do nothing. And, you know.
It's like, you look at it, though, the market only really popped at the beginning of this week because of Europe quantitative easing.
Yes.
So it's like what, you know, the whole thing's geared around quantitative easing. So
it
is. Like, now we're going to raise rates because everything will be fine because the market's so screwed up that Europe's going to pump all this money into the market.
Right, right. And we know
quite a shell game.
There's a great article today, folks, inside the Wall Street Journal. It's on the editor. It's on the op-ed page actually. It's by Kevin Warsh. Now, and another guy. Kevin Warsh was a Fed governor, and what it's the article is so simple, folks. He just breaks it down, and we know where the breakdown comes down. So check this out. They're talking about how the economy hasn't accelerated as much as it has in the past. Now, to me, that makes total sense because the crash was so dramatic. So I don't have I suspect that it's going to take longer because people are more worried, right? But inside of that, factually, what he shows is this: is that everyone talks about how the S&Ps are up so much and companies are making money, and he shows that what has really happened, it is not production, it is the amount of free money that the companies have had, and they bought back so much stock that their earnings go up. Sure. That's pretty intense, man.
Sure.
Because you only can do that for so long.
Right.
You know, and that's the argument he's making in there is that quantitative easing, the more that you put into it, the less you're going to get out of it now because everything's been squeezed down, which makes sense, you know.
Yeah, it's diminishing returns.
Big time. Yeah, big time. Right. You know, and you can't, you can go through the aspect that should they do it, shouldn't they do it? Well, if you're a public company, it totally makes sense, right? I mean, you're supposed to do the best you can.
Of course.
And you got to financial engineer everything.
Really highly leveraged in debt as long as you're reliably, and managing everything efficiently in terms of being able to pay it off.
You pay 1/4%, 0.5%, whatever that is.
As a company, you're making money on the equity you have, right? So
totally.
And a good company should be able to make more money than it's costing them to get that debt. And so they're highly leveraged.
Exactly. Exactly. So let's go inside first. We'll go inside the Dow, see what's moving the Dow out here because, what you had yesterday was a flat market, and really you got a flat market now. So
everybody's waiting on that Fed, right?
They are, man. I don't know if they're waiting on the Fed or waiting on Apple.
Yeah.
I guess Apple until this afternoon, the Fed after that. So what's moving the Dow? You get Pfizer's up $1.18, Merck's up 87, DuPont's up 90, and United Health's up $1.10. Now taken away from it on the way down, Caterpillar's down 91, Chevron's down $1.08, Goldman's off 211, and Big Mac is down 126. I want to look at McDonald's for a second because it's intriguing what happened with McDonald's. McDonald's, that just maybe. That's a nice doji at the high here. And, McDonald's was a blowaway, no doubt, but it just might have blown away too much because it went from $87 in August up to $112. That's pretty intense.
It is.
Yeah.
It's almost 50% move.
Yeah.
It's like a 30-40% move.
For a hamburger joint.
Right.
Okay? That's pretty intense. Now, if we go over to the oil market, so check this is, it's just amazing. So oil right now is down 2.75%. It started moving lower yesterday. It's coming back into where the breakout area is, okay, which we're at 42.92, so like 40.10 is game. But, so what happened, I believe last night, let's see if it's last night, what happened with the budget? Okay,
yeah, the buyback.
Yes, so let's see. Obama and top lawmakers, they reached a tentative agreement last night, and inside that tentative agreement, they are going to sell down oil out of the. We haven't.
Yeah, the reserve.
Out of the reserve.
It's not much, right? I was reading it today. I was trying to see if it's in this article. They don't.
No,
we can pull it up. We'll pull it
right.
up at one of the breaks. It's not much.
It's not much, but it's enough.
I think we have like 675 million barrels, and we're selling like 10 million barrels, or 50 by 50 million barrels.
58 million.
There. Okay. Yep.
Now you want to hear the sick part, though, folks?
That's 58 million over like 2, 3, 4 years or
right,
something. It's
right. The sick part, though, is that the oil better get back up to 75 because they figured
What is back up to 75? What do you?
The oil market, because
okay.
Well, they're going to sell it either.
Okay.
They're going to sell it either way. But their average cost, I saw inside there, the average cost of buying it was very low. But because they've stored it for so long, that the average cost went from like $35 up to $75.
Yeah. Yeah.
But the bottom line is that
I'd love to know how those budget talks went as to why that mattered, because it seems kind of ridiculous. It's not even much money raised, and it's raised at these low oil prices. And so what is the?
What I got out of it is that they were saying that something was going up, and then they used that as the other side of the balance sheet, saying this is going to pay for that.
Right.
Tom O'Brien, we want to hear from you folks. Our phone number is 877-927-6648. Coming right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tommy O'Brien, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you got the Dow down 54, Nasdaq's off 19. S&Ps are down 7. And the S&Ps are getting hit compared to the Nasdaq. You know, the NDX is only down 3. The S&Ps are getting hit. More than likely, that's those oil stocks. Those oil stocks are getting hit pretty good out here this morning. If we go take a look at some of the commodity markets, folks, what we have out here today is that you get we get natural gas is up 1 7/10%. Don't touch natural gas. We'll go through that, but man, that looks to me like it's going to go a lot lower. Wheat's up 4/10. Soybeans are up 4/10. We got let's see, gold is up is flat. If we go over to the wheat market and we take a look at wheat right now, you know what wheat has done. It's kind of interesting. Wheat got smoked from June, comes down, it's trading at
June, July, August.
Yep, 623. Comes off that bottom, though, and, you know, when we had Sal on from Tukrium, he was explaining that the seasonals are really important.
The seasonal charts he had are pretty cool. I think they're still up on the front page of TFNN.
They are.
Check it out.
They're right in the breaking news.
So when was that date that he came on? We'll have to look at that.
I know.
Was it that around that bottom?
It was around here, yes.
We'll get the date. Now,
Yeah.
now I'm extra curious.
No, there's no
Seriously.
doubt. Because what you have here, folks, also is this. So watch this. You know, and you can trade these inside the ETF structure. It'd be WEAT. And what you had, this is a classic. So you come off the bottom. We hit a bottom there. You can see that's, and if you're looking at the chart, the volume's on your left-hand side. We'll explain if you're in your car. It's 48,000.
You're looking at September 4th.
Yes. 48,000 contracts at the low. It had got under the 87,000 contracts from the prior day. And what I always like to look at is was the last time with big volume, and that was 114,000 on the 27th. Now, so what that would mean is that you get
Of
to
August.
Yes. So of August. Thank you. Yeah. So we get to lower lows with lighter volume. Then what you need is you need the sign of strength, and the strength start coming in. September 11th, you had 78,000. Then we had 80,000 on the 12th. You go sideways, we get another nice sign of strength, 100,000 on the 30th. Then what you're looking for is you're looking to back down with volume, with light volume.
Yeah.
So we had 91,000, which was a lot. Then you got lower, though, and it died in the vine. 46,000. Then yesterday, you had some juice.
Big day yesterday.
Big day. So, you know, that's setting up that looks to me like he wants to go into the top of the range.
It'd be a nice ABC too. A, B, C.
A big time.
Yeah.
Big time. You know, and in that context, okay, so what gets in the larger picture, right? I happen to think, well, let me ask you this. Do you think things are getting more expensive?
I do.
Yeah.
Yeah.
And what is getting more expensive?
Everything on a daily basis, I think. I mean, yeah.
And it's a lot, huh?
Yeah, for sure.
You know, I think we all got to really start paying attention to, like, what we're buying. I'm trying to figure out. Food has definitely got a lot more expensive. It just seems like everything's $25.
Yeah.
You know, And it's like, okay, if that's the case, and they claim that the CPI continues to go down, it's like, okay, so has oil come down so dramatically inside that CPI? That makes a difference. The rent structure is going up.
Yeah.
So I think that the Fed, when I'm looking at this context, and then when I look at it technically as to gold and the dollar going up simultaneously, that is saying to me that, okay, now that can happen because what it would be is that whatever we're buying, okay, so figure a fiat currency, you're buying something, we get something in return. Well, because all the other currencies are going down, the dollar would still be the highest currency fiat-wise, but gold would be higher because hard assets would be worth more money because they're costing us more money.
It's still tough, though, because you're putting it in dollar terms, right? Gold.
Yes. Oh, yeah, because it trades in dollars.
Well, right. For both of them to go up, though, then that's...
I know, it's intense. It's never not happened before. Yeah. Normally, if the dollar goes up, gold goes down. Sure. I mean, that's the correlation. Do you know what I mean? Now, where the difference would come in is that if we're really in an inflation... We haven't been in an inflation year. You weren't even born.
Yeah.
That was, when I bought the 1974, I think I bought my first house. $14,000. Right. And interest rates were 14%, though.
Yeah.
And then what happened during then, this is what's so crazy, Tommy. During then, folks, you know what happened? Is that even at 14%, if you bought a house and flipped it, it didn't matter. You could make money because inflation was running.
Rates were at 14% for a reason.
Yeah.
Everything was flying.
Everything was flying. You stay right there, folks. We're coming back from Lou from Nashville, New Hampshire. Dow's down 46, Nasdaq's up 18, S&P's down 6.5. We're going to be right back.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 57. You get the NASDAQ off 19. S&Ps are off 8. Let's go to Lou in Nashville. Hey, Lou, what's going on?
Hey, just raking leaves, getting ready for winter.
Raking leaves. Oh, man, they don't stop.
Well, you're telling me.
Well, let's see. It's I guess, yeah, the trees are bare now, huh? After the, yeah, the...
Are you late in the season, Lou? Or how's the foliage?
Oh, no, they're just starting to fall.
Oh, are they? Oh, cool, man. Then you get some beauty,
pretty.
man. That's cool.
It's pretty.
Yeah, it is.
Yeah. It doesn't look pretty to me.
I know. It's double-edged sword, for sure.
Wicked. That's wicked,
Yeah.
man.
I'd rather see a palm tree.
Yeah. What are we going to look at?
Okay, I was looking at maybe shorting the S&P or the NASDAQ.
Yeah, this is a tough one, man. Okay.
Yeah, I don't know.
Yeah. So, okay. So let's walk through this. And here, I'll walk you through where I'm at right now. So I'm short the Nasdaq. So picture I'm short the Qs right now in the futures market, and I'm looking at it. I'm saying to myself, okay. So how am I going to commit to the close here, right? With Apple, because inside the NQs, folks, we're at 46.16. Well, if Apple comes in right, they can go up $30 in about a heartbeat, and just $20 a point. So it's like, okay, man, that's a lot of money, right? So what I'm going to do inside the Qs, I'm going to let this thing trade out until, coming into the close, because right now there's not enough volatility in the market to tell me anything.
Right.
And so what I'm going to look for inside Apple is this. I'm going to look, now if Apple, what happened yesterday is that Apple came down, and we came down with 66 million. And if Apple's going up today and there's like 35 million or something, I'll still take off a third of the position that I have. I'm not going to go in where I'm at right now. The only way that I would stay where I'm at right now is that if I see Apple giving up a point and a half,
Right.
So that's the Nasdaq. Okay. Now I'm not short the S&Ps, but let's go over to the S&P, because what is happening inside the S&P out here today is that you do have selling pressure because of the oil stocks. So the S&P would give us an indication if this pulls back and has volume, which it has right now. Right now it's pulling back with volume. Okay, we're at 200 million already. It was 840 yesterday. So if that does pull back with volume, then what I would do is you could flip that position and go short the S&P, Lou. That would be a better trade.
Yeah, that sounds right.
What would happen, though, just so everyone knows this, right? If Apple comes out with good earnings, right, everything's going up, man. The Nasdaq's going up, the S&P's going up, and the Dow's going up. Because the weighting structure of Apple right now in all of those is pretty intense, man.
Yeah. Right.
And then you're dealing with the Fed tomorrow. But as to coming into that close, that's how I'm gonna kind of do it. And you see, I've been flipping this thing around all morning long. In fact, I didn't work out this morning. I was in here early because I wanted an extra hour of doing nothing, just planning on how I was going to trade this, You know, and
Yeah.
what happens, folks, is that you better make sure that you have this planned out before the fact, man.
It could be, you know, it's not even their earnings too. I wonder, and I haven't read much about it, but
Yeah.
they could be giving guidance for their holiday season. So
Totally.
there's just so much on the table.
Totally.
For those that earnings
It's
call.
huge.
Yeah.
It's huge. And we know that people love their phone. They got a great phone. There's no two ways about that. So it's not a quality issue. I think it's an issue of how many people have phones right now and how many more can they sell.
They're going to be fine. They just happen to set the expectation really high. That's the
Right.
problem. It's, you know, it's what's the expectation, not how well you're doing. They're
Right.
going to make billions and billions of dollars and keep growing, but
Right.
Then-
And if everyone in China starts buying their phones,
Yeah.
guess what, man?
Yeah.
That thing's going to go higher. You
they've
know?
got a lot of
Yeah.
competition too, though. That's, you know.
Oh, listen, I got a Samsung.
I joke with my friends that they're dominating the world, and it's
Yeah.
just kind of like how slowly they can lose that domination. And it's, you know, just because there's so many good Google products. I mean, you have an Android phone, you haven't gone there. It's not, you know, and let alone it's like now they have. Who else are they getting besides? They really need to tap in some of those markets where it's China. But then you look at the products I think Android has. They're so cheap, some of them, on the tablet, on the phones. That's going to be a hard.
And
They're such a premium product.
You know, it's amazing, Lou, is that I have a hard time now because I've had, you know, Android for so long. I'd have a hard time paying up for that Apple product at a certain
Yeah.
point. Do you know what I mean? Now,
On the other side, I had Android, and I went over to Apple after
You did.
like 3
No,
years,
you-
and
you did.
it would be tough for me to go back after.
Yeah,
and
I-
I had an iPad already, so now they really have me fully.
and I think the iPad's a dynamite, man. There's no doubt.
I was just telling you that, you know, for streaming wise, we were talking about the NFL game and how you could pull that up, and I said you really have to get, you know, a working, because in terms of just streaming and the apps, that's really cool, being able to go everywhere, whether you pull it up in your kitchen and then you have a TV, whether you pull it up wherever you
Well,
want.
Tommy and I were working out in the Traders Expo, and we were coming home on the plane, man. That was a no-brainer. You had that was
Right,
awesome.
traveling for
Yeah.
sure. Yeah.
So, Lou, maybe you just want to wait till tomorrow until Apple comes out.
It's tough trading anything like that when you have Apple earnings. It's, you know, no matter what we tell you, whatever those numbers say is going to be pretty telling of what happens in that trade.
It is.
Yeah.
You know, and so what ends up happening there is that it's just a risk versus reward,
Yeah.
and how much.
And just be watching that trade as those numbers are coming out, and if it's not going where you think it's going or something's happening, don't be afraid to get out of it.
And
That's
and
what I
how
would-
much are you willing to lose?
Right, because
that's where.
and don't be able to get out of it when you've reached that point,
no
because
doubt. No doubt.
as we see, anything can happen with the tech sector earnings, especially recently.
Baby.
Yeah.
Okay, great. Thank you for the.
So see, now you can just dive in those leaves and bury yourself and have that sun hit the leaves. Have you ever done that, man? I used to always love doing that. I used to love laying in leaves, and if the sun hits you, know the leaves get nice and warm.
Is this like 15 years ago or?
Probably longer than that. But that's always a good feeling.
Yeah, no. Listen, it's raining down and cloudy in Florida today, so enjoy some of those beautiful, beautiful leaves, beautiful
We're going
foliage.
to try.
Okay.
We're gonna try. Thank you.
Have a great one, man. Have a safe one. Yeah, I used to like that, man.
Sure.
Totally.
Yeah, as a young kid. I
Yeah.
remember.
Yeah.
Yeah. No.
Totally.
Yeah.
So what do we got out here? So gold is staying flat. Gold's up 80 cents. The bond market is the one. So check this out. This is like crazy, man. These bonds just. Yeah, this thing's moving, man. You get a 500. Is that no 500? Yeah, it's 500.
I saw a headline somewhere on the internet today, whether it was Yahoo, CNBC, somewhere where, you know, people, and like they should in terms of sensational headlines, getting some impressions, but
Yeah.
talking about what if they go to negative interest rates? You know,
I know.
I mean, it's
possible.
it's not just a attention grabbing headline. You should be, at least that's on the table. It has
Oh,
to
it's
be.
on the
Yeah.
it's on the table. You know, the reason
We didn't raise them because of Europe, right? And then Europe came out and they're like, all right, we got to do some quantitative easing because we're in big trouble. So it's like, okay, so what are we going to do now, right? We're saying that Europe and China and all that really matters, and then
absolutely. And what has happened yesterday? Yesterday Monday? Yeah, yesterday. Bernanke comes out. And I guess he said it on Sunday. He says, well, yeah, I never thought negative rates would be viable, but he does now. It's like, okay, so now this is the first deal. Okay, so, you know, we can go into negative rates. And
like I said, I mean, I'm 35 years old. My generation is used to like zero interest rates. So it would be shocking when you start talking about, you'd almost see it as a missed opportunity. If you didn't buy a house with those type of rates, if you didn't lock in a car with those type of rates, are you really going to, if rates go up like to 5-6%, say, okay, now I'll buy a house. Now I'll lock myself.
People would be in shock.
I would, yeah. It would be really hard to get over that barrier.
So right now, folks, we're looking at the 10-year rate across the world. Now, when you go down here, this is every time I look at this, if I didn't even do technical analysis, or it's like they can't go up because I look down here. So Switzerland, on a 10-year rate, you're going to pay them 0.3% to hold your money. No, to give you.
Sure.
No. What? Hold it. Yeah, you're going to
give them.
You're going to give them the money, and it's going to cost you, and you're going to pay for it to store it. You know. So
now, are they storing that in francs or dollars? When it's
that would be Swiss francs.
So all these you're storing it in that.
I believe Switzerland's not in the Euro land. Yeah, that's Swiss francs.
Yeah.
Because that's what
and that's why, though, too, right? Because every country has their currency, and that's what you're paying for as well, right?
And what happened is that one of the biggest trades that these large banks lost a fortune is that when Switzerland turned around and basically, I'm not sure what they did, but their Swiss franc went to the moon, and everyone was basically on the wrong side of that trade, and they lost billions. And that was only like about a year ago.
Yeah, I remember the headlines.
You know, so if you look at Italy, so Italy's gorgeous, but Italy is at 1.4 in a 10-year. Spain is almost broke. They're at 1.5. Portugal is broke, is at 2.4, and we're at 2. You know, Sweden gets plenty of money. Netherlands has plenty of money. They're small countries, though. I mean, you know, they're like our cities. You know, the thing is wild is too when you realize
they're saying they unpegged it from the euro. I think is what happened.
Thank you, thanks Terry. Yeah, they unpegged the franc from the euro, and
everyone's like, oh well, that's way more attractive than you guys have had it pegged, right?
Big time, big time. That's like running into the gold market. There's no doubt about that. If we do go over and we take a look, see, gold's flat, but you still have some of the equities that are pushing with volume. If we look at an Eagle, AEM, this has been intriguing too. So that's going to reject lower price today. It's been this consolidation. We'll see whether, I mean, the good news is they rejected lower price. It hasn't gone up yet. It's up 34 cents.
Support range right there.
It is. Yeah, it is. So someone's buying into those gold equities. And
let's take a look at Yahoo. Can you pull up Yahoo?
Yeah.
We were talking about those streaming numbers.
Yeah. So, hey,
we'll go through with the break. Maybe we can do more, but
let's do it. So, how much did Yahoo pay for that football game?
So, I believe it was like $20 million they paid for the rights to broadcast the NFL game Sunday morning from London.
I know I had read something saying that they had to go down from $200,000 to $100,000 for a commercial. That was prior to the
That was
the game
selling
started.
Their ads or whatnot. And there's debates over what everyone's saying. Well, that's super normal because you're gonna set your rate card at obviously on the high side. You're never gonna set your rate card and then go up from there.
Right.
So I don't know how. Who knows? Who knows what those negotiations really mean? But Yahoo is trying to spin it as this is completely normal prior to the game. Everybody makes deals.
Right.
And the articles were writing though that of course, well, you pegged it at 200, then you're coming down to 100, and they released their numbers and they're just starting to dig into all those numbers, and they're saying really that if you had shown up at yahoo.com, just yahoo.com, that if you stayed there for a period of like whether it was 3 to 5 seconds, somehow maybe a quick pre-roll, and then you started watching the game and where that game was on the screen. I haven't read the articles.
It's probably in the front screen. It would have to be.
That you got counted as a viewer.
Right.
And then they were saying, the average length of the viewership when it was over how many minutes were watched, it was pegged down to almost like maybe 1.5 million people per a minute were watching at any time.
Yes.
And that's a low number compared to most NFL games in terms of the average viewership at any given time.
Right.
But, like I was saying to you during one of the breaks, it was a horrible game.
Yeah.
So, don't judge it completely because I was up and I turned it on and it was just a horrible game.
Did you turn on TV or turn on Yahoo?
No, you can't turn it on the TV. It was only on the web.
Oh, that's cool.
Yeah, it wasn't even. This is the first time. It was only on.
Okay,
there's always been games streamed. This is the only one that was not on TV. So your only option was the stream.
So I can see why they paid so much money for it now. Right. They were hoping that,
it's the only one. But I said to you, they should have worked a better deal. It's the first of its kind, and you pay, the game is just horrible. So, you have to take a proactive action to watch it, which people used to just mindlessly turning on their TV. That's easy. But going to your app, going to your iPad, going to your computer, logging on, pulling it up, that's very you have to be proactive in that. And if you don't care about the game, why are you going to take that effort?
Well,
that was a big part of...
I had just said to Tommy.
I can't even remember really who was playing. I know it was Jacksonville and Houston. I don't know.
Well, I had planned on doing it. Okay, and the bottom line is that I got up. I planned on doing it, but I didn't.
Yeah.
You know, so it
have
had
to care about
it probably
As
had
opposed
to
to
do.
turn on your TV. when
Yeah,
it's-
like click.
You've been programmed to do that, but you really need to care about it to pull up your computer.
Yeah.
So it'll be interesting how that plays out in terms of streaming numbers, and I'm sure the NFL was not happy with how Yahoo was able to do it, because if Yahoo could pull in 5, 10 million, 15 million viewers, well, guess what? Then they're going to be paying the NFL.
Oh, yeah.
So nobody's going to pay the NFL if Yahoo can't even drive people to watch their games.
And what you have here is that
Okay, it was the Bills, and it was a good game. It was Jacksonville versus Buffalo, but they're both kind of horrible teams, and they had a good game, but they're both having tough years. And,
Right.
Jacksonville by its own does not have a very big following in the NFL. That's
No.
a tough one. So
No. Plenty of money, but no following.
bad draw, exactly.
And Yahoo. I mean, Yahoo's trading $52 last November. You're at 34, and this.
Put yourself in Yahoo's position, though, right? You're going to do it for the first time ever, and you're going to pay tens of millions of dollars.
Right.
And how does that go? Do you say whatever game you give us, we're good? How does that? That should really be. Don't put us on the plate to judge us on the first game ever.
Right.
Because look how it reflects upon them. We're sitting there talking about them, saying, "Geez, they couldn't pull anything."
Right.
And they're almost playing games with their numbers with Yahoo.com, counting somehow in
Right.
viewership. I would have pushed harder, because I think that Yahoo did a horrible job, and it speaks to the viewers that they can deliver.
No,
And it might totally not. That's right.
What also happens, there's no doubt. With one of the Tigers is saying, if you had the Cowboys, the Packers, or the Patriots,
they should have worked that in, though.
Yeah.
So, they should have told the NFL, it's in both of our interests. Don't make the first time you do this a big deal. We all promote it, and then it fails. We look bad, you look bad.
Right. No doubt.
Yeah.
You stay right there, folks. Tommy O'Brien, Tom O'Brien, we're going to be coming right back. Dow right now is down 28. NASDAQ is off 9. S&Ps are down 3. NDX 100 is up 6. We're going to be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Tommy O'Brien, Tom O'Brien. Appreciate you growling and prowling with us out here. Now, don't forget, folks, you can get all the programming right here at TFNN, right on your cell phone, tfnn.mobi. We got our man, Mr. Basil Chapman, coming up next. Then we're going to TD Ameritrade Thinkorswim headquarters in Chicago. Kevin Hinks with the Option Hour. Steve Rhodes right after that. Dave White. I'll come back from 3 to 5, and we got our man, Mr. Andy Hecht, coming up. So a lot of good programming.
I always listen to that Options Hour. People should check it out. I tell them every time. Options are up and coming, and Kevin does an awesome program.
He does, man.
It's at noon every Tuesdays. Check it out. Call in. Bounce your trading ideas off him.
Yep.
He's got a lot of knowledge to share.
Huge amount of knowledge. And, of course, what we have this afternoon, which is going to put volatility into the market, is at 4:30 this afternoon. Apple's going to come out with those numbers, man.
Yeah.
Apple. Isn't it amazing when you think about it?
It is.
It really is, man. It's going to be wild watching this thing shake out. The a couple of golds, couple of silvers, they got some action out here, as one of our Tigers was saying. One of the ones which is really a nice indication of where gold is going is Franco-Nevada. Now, Franco-Nevada is at 53. The cool thing is now it's going to need a lot more volume because the volume's dying on the vine, but it's almost done 100% move for move. And what that means is that in May it was trading at $54 to $56. It goes all the way down to 36, I think. Yeah, 38, and now it's back up to that level. That's most of the time. That's the most that something does, and then you build cause again. Yeah. One of the first equities that did that is Great Panther. That was the first equity that I follow anyway, that got up to that May, back down.
Same thing, 60 cents to 30 cents, back up to about 60.
Exactly, so as we watch this.
They're kind of hanging out a little bit, waiting for tomorrow, too.
No, they definitely are. Oh, man, there's no doubt. Because if they don't go up, I mean, it looks to me like they're not going to go up. But if they don't go up, bottom line is that gives the metals breathing room, Let's go to Charlie in Ellington, Florida. Hey, Charlie, what's going on?
Hey, Tom, how was Vegas?
Vegas was good. We were busy. It was work, man. We were in a booth. Yeah. We were working. It wasn't like it normally is that I go in there visiting booths. It was work. It was fun though. It was great.
It looks like Tommy was pulling them one-armed bandits with both arms.
How's that? Oh, I'm telling you,
he ain't getting that, huh?
No,
one-armed bandits with one arm. I don't know.
With two arms.
Yeah, well, you got to pull right and left. You got to build muscles on both sides. But anyway, my question to you is, I just some insight, and I just wanted your thought on this.
Yeah.
Is a couple months ago, I needed a new phone. I went to the Sprint store.
Okay.
and the Apple phone was $25 and $30 a month, just to whatever one you get. They're 2-year deals.
Sure. Yes.
And I own my phone outright, so I didn't really want to pay $25 or $30 a month.
Right.
I'm not an Apple person.
Yeah.
So I kind of held off, and I went back like about 2 weeks later, and the Apple phones for their top phone is now $15 a month. And if you pay $2 extra, you can trade, so $17. Every time a new phone comes out, which is every year, you can trade it in for that same cost.
I know.
So basically, Apple went from getting $600 for their phones to $180 for their phones. So basically, they're giving their phones away now, and they started doing this probably about 6 weeks ago. And I was just wondering your insight on that.
Well, just be careful. That's $180 every year, where people would keep their phone normally 2 to 3 years, though, on that initial cost. So they're going to be getting $180 from every person every year if they take that plan. And there's a lot of pricing models.
But they were getting $300.
Yeah, I think they're still playing with those pricing models. I did the same thing. They used to sell it all. Now it's monthly.
I wish we had more time. Thanks for calling.
Charlie.
Stay right there, folks. Basil Chapman's coming up.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.